And speaking of noise, I have an interesting topic that I want to make sure to cover here today, tied to the jobs data and the non-farm payrolls that we got on Friday. Good afternoon. If you're in the Pacific Northwest, I hope you are ready for a nice weekend coming up. Before we get too far into the weekend already, we are finishing up jobs week here this week, and we also get CPI inflation data all ahead of the Fed decision and press conference coming up next week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. And speaking of noise, I have an interesting topic that I want to make sure to cover here today, tied to the jobs data and the non-farm payrolls that we got on Friday. So this is actually really important. So non-farm payrolls came out on Friday. It showed another, good jobs number, but it was brought to my attention by somebody on the team that they had noticed an interesting trend, which is that although these numbers have been looking good on the jobs additions the last, I think it's 3 or so now, job data points, the revisions have come out. There's been revisions afterwards, and they have decreased these numbers significantly. So I wanted to spend a couple minutes on this. And again, I really appreciate Brad on the team for sharing this. But basically, this is not normal. There can be revisions to jobs numbers, don't get me wrong, but it's not normal where we see 3 months in a row where revisions come back and pretty significantly actually reduce the jobs added for that prior month. So we've seen that happen. What will happen as far as Friday's data, we will wait and see. But nonetheless, that has really been something to pay attention to, and I'm glad that this trend was caught, because obviously we see the headline number and that seems to be where we finish. But as with everything with data, of course, it tells a story. And so trying to figure out how that relates to other data points, what might come in the future, and really trying to break through all of that, again, break through the noise to find out what's really going on, I think is extremely important, especially in a period where these are shifting quite a bit after they do come out. So speaking of, I also want to talk a little bit about inflation. So on Tuesday, we had CPI, Consumer Price Index data, come out, and it was quite the surprise to the upside. So headline inflation, so again, the CPI number came out at 0.4, up 0.4% for the month. And I want to highlight that this is in a period where energy did come up a little bit. So we've been talking about that and how that could relate to higher prices ahead if you've been kind of watching us on a regular basis. Certainly might have shown this month. However, we also had core CPI data come out, which takes out food and energy. And even taking out those two categories, core CPI was up 0.4% for the month as well. So, if you track this closely, you may know, but maybe if it helps to highlight, what this is showing is that if we look at, and let's focus more on the core CPI data, what this looks like is basically we've had these kind of hills as far as inflation data points and high and lows. And obviously, especially late last year, we started seeing inflation come back down. The question was, are we done? Is the job finished? Can we move on? And now, really, let's say January and February, but to some degree December as well, we've started to see that ramp back up a bit. And to be clear, I don't expect inflation to ramp back up. I don't expect us to go back to where we were. But for those who do who tune in pretty frequently, you've heard me say time and time again that we do believe inflation will be more sticky. And I think this is a good example of that. I think for the Fed to get their core CPI data from, the roughly 3+% that we're at now on an annual basis down to 2 is going to be a lot harder than it may seem on the surface. And this certainly is a signal that may be the case. Now, all of this is just in time for a Fed decision and press conference coming up next week. So definitely tune in next Thursday. We'll break apart what we share there. But for the question of the week, and I do want to keep it a little bit shorter this week, as I'll be on the road a little bit here for the end of the week. But I do want to touch briefly for our question of the week on a glimpse ahead of the Fed. And again, in a short format, what I want to share is that the Fed is likely not going to have any sort of big shift in what they share next week. Obviously, we will see. And if the Fed surprises with either, completely changing their tone and sharing that, maybe they're keeping rates even flatter for longer. Now the market's pricing in June, but let's say they said they're even considering hikes, for instance, which I don't expect at all. That would obviously have an impact. More likely, I think the Fed's going to suggest that things are what they are, things are what they said they were last time, and the message is going to remain the same, that they're not ready to cut, they'll wait to see the data, and they're going to be patient to make sure that they're making the right decision and that inflation is under control prior to making these changes. So for those who are going to tune into the press conference next week, I would pay close attention to the language used, because the reality is I don't think the decision is going to surprise anybody. It's very likely the Fed does nothing in this next meeting, but certainly hearing what they have to say will be important. And again, my initial take on it is that the message will not necessarily change what it has been. It will be that they're going to keep rates where they are for quite some time. They want to make sure they see inflation come back down. And everything that we're talking about in terms of inflation data would suggest that we're not there yet. And so it's likely we'll kind of be in a wait and see mode as we continue to see where the Fed takes things from here. So hopefully that's helpful. Certainly a lot to cover ahead of the Fed week coming up next week, but be sure to tune in next Thursday at 3, and we'll break apart the Fed decision and press conference to follow after we are able to digest and share that with you next week. If you're in the Pacific Northwest, enjoy the sunshine here this weekend. I think it's supposed to get into the high 60s, low 70s. So enjoy the sunshine, and we'll see you next Thursday at 3.